Hello, very good morning to all, and welcome to a brand new week. I'm Kelvin here again. Welcome to today's daily dose of market insights. Welcome to a brand new week and a brand new month of June. Very good morning. Today will be the 2nd of June 2025. So, as usual, before we jump straight into today's gist of market insight, of daily dose of market insights, pardon me, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. As well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, let's have a quick recap first of what has taken shape on last Friday, over the weekend, and as well as in today's early Asia session in terms of key economic data releases, respective key data flows, events flows, and as well as their impact on the respective broad-based cross-asset classes over here that I wish to actually share with you guys. All right, so let us start with last Friday first over the performance of the broad-based cross-asset classes. All right, give me a minute. Let me adjust my screen so that you guys could have a look at the charts. All right. All right, okay, good. So let's start with last Friday key data flow. All right, on last Friday, we do have the release of this core PCE price data from US, where is a key inflation metrics that the US Federal Reserve officials watches. So both on the month-on-month basis and a year-on-year basis for the core PCE price index came in within expectation. For the core PCE price at month-on-month, 0.1% for the month of April. That is also within expectation of what market is expecting as well, and also at the same pace for the in line with the previous month of March. So if you look at the core price, PCE price index year-on-year also came in within expectation, 2.5%, and 2 basis points below what was the market is expecting at below the previous month of March. All right, so 2.5% year-on-year. Previous month of March was 2.7%. So if you look at the core PCE price index, it's been generally very flattish over here in the last month or so. Okay, let me share with you on my screen. Okay, give me a minute. So it should be up by now. Yes. So this is the core PC price index year-on-year change. So it actually inches down lower to 2.5% for the month of April, but that came in within market expectation over here. And that also we call it but what's interesting over here is that that doesn't change the dial of what market participants has in the Fed funds futures market on future US Federal Reserve monetary policy decision. So if you look at the CME Fed Watch 2 over here, let me share with you guys. Okay, so if you look at the CME Fed Watch 2, market is still not assigning any high chance of a 25 basis point cut in the upcoming 18th of June FOMC meeting by looking at the probability that is being assigned by the Fed funds futures market traders over here. So what I could see is that on my screen, market participants assigning almost 99% chance, or I put it 100% chance, almost, that the Fed funds, the US Federal Reserve Central Bank will maintain its Fed fund rate at 4.25% to 4.5%. So this is the current rate. High chance, about 98.7%. So take it as 100% that they will maintain it at 4.25% to 4.5% on the 18th of June 2025 meeting, which is this month over here. And if you go down the calendar by looking at the aggregated target rates, that means what they do over here is that CME Fed Watch 2 will also compile the down the road, we call it other expiry contract for the Fed funds futures, not only in June but the other Fed funds meeting as well. That means going down the calendar on July, September, October, and even in September. So we know that this is the current Fed funds rate. So high chance that on the 18th of June, market participants assign a high probability of close to 100% that the Fed will not cut. And also in July, rather a high chance of 76% the Fed will maintain status quo at 4.25% to 4.5%. And the next cut will only come in likely in the September meeting, 17th of September, at 88% chance to bring it down to 25 basis point lower to 4% to 4.25%. And October, 50-50. All right. And the next cut, 82%, another 25 basis point cut on the 10th of September 2025 FOMC meeting to bring it down to 3.75% to 4%. So what the market is assigning the odds right now is almost unchanged around since the start of this week, before the release of the core PCE price index data that came in within market expectation. Market is still not looking for the Fed to move the needle significantly. That means still looking for only potential 2 interest rate cut before 2025 ends, and that will come into the later part of this year, which is Q3 in September and as well as in December. So what's the reason why market participants in the Fed funds futures is not assigning a rather dovish Fed move, but rather a wait and see approach that is in line with US Federal Reserve official guidance so far, is due to the uncertainty surrounding Trump's tariffs implementation. Because if you look at last Friday, Trump's actually mentioned that, let me highlight my screen. Initially, he said that China, they means China, violated a large part of the agreement we made. Trump told reporters Friday in the Oval Office. That means, i.e., that he is referring to the agreement that has been made earlier last month in that trade truce negotiation deal that both parties has agreed in Switzerland. But yet on Friday, he made this surprising announcement stating that China violated part of the agreement over here. But then after that, he's saying that I'm sure I'll speak to President Xi and hopefully we work that out. And that created a wild swing in the US stock market on last Friday. So what do I mean by that? So what I could see over here is that initially, where he made this announcement around the start of the US session at between 9:30 p.m. 10 p.m. Singapore time, the US benchmark stock indices plummet. Then thereafter at 12:30 a.m. Singapore time, he made the announcement stating that he and China President Xi could work things up by having a one-to-one meeting, and that causes the U.S. stock market to rally strongly into the close, and all of them almost remove their earlier losses, intraday losses on last Friday. So the SPX closed almost unchanged. The Nasdaq 100 no marginal loss of negative 0.11%, the Dow Jones 0.13%, and the Russell 2000 still fared the worst with negative 0.41%. But however, as we are speaking right now, at the start of today's Asia session, which is also a brand new month, both the Nasdaq 100 E-mini futures and the S&P 500 E-mini futures are deeply in the red, right? So this is what I mean. This is the Nasdaq 100 E-mini futures. Okay, oops, I think it's not showing up here. Yeah, all right. So they are deeply in the red right now as we are speaking on the intraday basis, down negative 0.6%. That's the Nasdaq 100 E-mini futures. The S&P E-mini futures is down by negative 0.4% as well. Also opening the new month, the new week at a weaker footing as we are speaking right now. Okay, so the reason why there was this mini bearish reversal on the S&P 500 E-mini futures and the Nasdaq 100 E-mini futures in today's Asia session as we are speaking is due to this tit for tat rhetoric talk between China and US. And China this morning accuses now US of violating the trade terms instead and vows for firm response. So it seems to us that the earlier tempering of tension between US and China that was we call it signed in the Switzerland earlier last month, that trade zones agreement seems to be now putting in the back footer and right in the back seat. And right now market participants now is worrying that US and China will start to trade bumps again. That means i.e. They could be up their ante by potentially doing this kind of strongmanship between these two countries. That means potentially, who knows, trade duties between US and China should may potentially increase again. All right, given both countries are now accusing each other of violating that trade truce that was earlier agreed in Switzerland in early May last month. Right, and with that, that also saw the dollar selling off as well. So as we are speaking right now, the dollar continues to remain lackluster over here. So the dollar is actually down against the yen by negative 1.18% as a safe haven play. So that is the 5-day rolling performance against other major currency as of now as we are speaking. And if you look at the dollar index, also remains rather weak. So what I could see is that after that earlier push up last week, price action can maintain that momentum and shape that bearish engulfing candle, right? Reintegrate back below the 220-day moving average at 100.10. And right now in today's Asia session is down slightly by negative 1.14% over here. And what's interesting over here, gold remains firm over here. So despite the fact that gold price, we start to see an earlier sell off last Wednesday, but this sell-off managed to form a bullish candlestick on Thursday, and so far right now it managed to hold right at the 20-day moving average, acting as a key intermediate support level at 3,290. So gold now is trading up 0.49%, almost the mirror image of what we are seeing the negative intraday price action on the S&P 500 E-mini and the Nasdaq 100 E-mini futures. Right. So as you are speaking right now, it seems to me that a safe haven demand play is coming back into the forefront of the global financial markets. That means positive on gold, positive on the yen against the dollar as well. So later I'll touch on the short-term intraday technical outlook on these broad-based cross asset classes. And also one particular news flow I want to highlight is OPEC Plus. So OPEC Plus, we in market expectation, decided to increase another third consecutive month of output hike. Means very weak temperate Asia oil demand due to the uncertainty surrounding Trump's tariffs implementation. So so what they do over here is they agree to raise output by 411k barrels per day in July. So this is the third straight month of similar increase. All right. So given the fact that oil price seems to be facing that sell the rumor by the exact news outcome. So what we are seeing now that oil price is in fact rallying by being close to 1%. It gap up in today's Asia session. Right over here, let me share you the oil price intraday. We are, in fact, it rose as high as 2.86%. Right, in today's Asia session. So there was actually a gap up in today's Asia session. So how far will this rally go? Later when I'll touch on the intraday technical outlook for West Texas oil. So this could be a potential dead cat bounce again. Now later I'll explain to you why from a technical analysis perspective on the price chart on WTI crude when I covered the second segment. And also another point I want to highlight is on Friday, or not on Friday, on Saturday, we do have the release of Tier 1 China data, which is the MBS manufacturing PMI data compiled by the state government statistical board, and as well as the MBS non-manufacturing PMI data that covers the services activities in China. So mixed performance, but overall the absolute numbers still pointing to a rather unrosy or lackluster economic activities or economic environment in China. So representing potentially there could be risks of we call it deflationary risk coming back into the picture. But on the other hand, with this deflation risk coming back, China policymaker may be forced to unleash more fiscal stimulus to counter it. All right, so MBS manufacturing PMI data came in within expectation 49.5, but still in a contractionary mode of 50. So anything that's below 50 represent contraction. So if you look at the trend of the China manufacturing PMI, all right, so if you look at the 10-year trend over here, okay, so it's the second straight month of contraction in factory activity. All right, so it's rather flattish over here. Okay, then if you look at the one that is in the services activity, the MBS non-manufacturing PMI, it actually came down below expectation slightly. Market is expecting 50.6. It came in at 50.3 for May, and also 1 basis point below 50.4 that was printed in April. So if you look at the trend of the non-manufacturing PMI, this is the lowest level since January over here. So rather lackluster, and in fact, this is the second consecutive month of growth deceleration. So despite the fact that it's still above 50, but the growth is not picking up as what market wants to be. All right, that means i.e. services activity growth is growing at a slower pace. So you look at the 10-year trend, right, it's rather also flattish as well, hovering around above the 50, but not so enticing in terms from a growth increase perspective. That means growth rate is actually slowly inching downwards. All right, now with that sum up the first segment of today's daily dose. Let us now proceed to the second segment of today's daily dose, which is the intraday technical outlook on the broad-based cross asset classes. Let me expand my screen. Okay, so let me start with the FX market first over here. So like I mentioned, the dollar continues to weaken, and the euro dollar continues to move up as expected over here. So still recall on last Friday, we do have a bullish bias on the euro dollar with near-term resistance at 113.75 and 114.25. So the first resistance has been made, 113.75, before price action starts to do 2 hour of a price action pullback as we are speaking right now. So since it can't have a decisive break above the first resistance at 113.75, I do not want to tighten my first my pivotal support level to be so tight to last Friday US session intraday low at 113.10. I was still using the 1.1270, which is the 20-day conferencing with the 20-day moving average as well. I think as a similar support level. So that will remains my short-term pivotal support level for now, unless we start to see in the start of the European session, we have an hourly breakout and the close above 113.75, then I could tighten my short-term pivotal support to 113.10. So still using 112.70 short-term pivotal support, maintain our intraday trend bullish bias on the euro dollar. After 113.75, exposes the next intermediate resistance at 114.25, followed by 114.80 next, which is the minor swing high area of 28th of April and 23rd of April, and also the former minor congestion area of 21st of April and 22nd of April this year. Only a sudden push down with a bearish breakdown and an hourly close below 112.70 that would invalidate today's intraday trend bullish bias to kickstart another round of minor corrective pullback sequence, exposing the minor swing low area of 29th of May, which is last Thursday at 112.20. Below it may see 111.65 coming in next. So that's for the euro dollar. Next up will be the sterling dollar. So the sterling dollar also moved up as intended on our last Friday bullish bias scenario, almost hitting the first resistance at 135.20 before shaping a minor pullback again. Right, so no change, still using the 134.20 short-term pivotal support level, maintain our intraday trend bullish bias on the sterling dollar. two key resistance level to watch today: 135.20 followed by 135.55. A breakout above 135.55 may gain much more traction for the bulls to expose the next near-term resistance level at 136.40 over here, which is the, if we go back, it's quite some time back over here. If we go to the daily time frame, all right, it's the medium-term swing high of 14th of February 2022. All right, so that's about 3 years back. All right, over here. Now back to the hourly chart. However, if price action has a sudden bearish reversal and a bearish breakdown of hourly close below 134.20, that would invalidate today's intraday trend bullish bias to kickstart another round of minor corrective decline sequence, exposing the next near-term support level at 133.70, which confluence with the rising 20-day moving average. Only a breakdown below 133.70 may trigger off a much more deeper corrective pullback sequence for the next near-term support level to come in at 133.10 next. Okay, so that's for the sterling dollar, still maintaining our intraday trend bullish bias using the same pivotal support as of last Friday at 134.20. Next up will be the Aussie dollar over here. So the Aussie dollar, as we are speaking right now, continues to trade within this 20-day moving average. We can't break above it, and also last Friday minor swing low area. So with that, seems to us that it now starts to form a very tight sideways range since last Thursday and last Friday minor swing low area. Okay, at this 64.07. All right, 64.07. Okay, this was last Friday hammer low as well. Yeah, 64.07. Okay, so I will use a slightly adjusted lower limit of that neutrality zone, 64.07, and price action seems to be not so unenticing as it continues to fail to break above the 64.55 level in the last 2 hours as we are speaking right now. So given the lack of bullish momentum in the last 2 hours, failure to break above the upper limit at 64.55, which is so very close to the 200-day moving average, we'll still maintain our neutrality stance for today on the Aussie dollar, 64.55 upper limit and a tightened lower limit at 64.07. Only an hourly close at and a bullish breakout in the European session at 64.55 that would trigger off at least a intraday trend bullish bias for it to revisit 64.09. Above 64.09 may see the next intermediate resistance coming in at 65.45 over here, which is the, okay, let me put it over here. Okay, this level here. Okay, the minor swing high area of 13th of November, 20th of November, and as well as 22nd of November last year. Okay, let me adjust it slightly. Okay, 65.45. Okay, also very close to the current minor swing high of 26th of May at 65.37. Right, so we just put it like a range. Okay, very close. Okay, this level here. Okay, 65.37, 65.45. Okay, however, if price action has a bearish reversal and a bearish breakdown with an hourly close below the adjusted lower limit of this neutrality zone at 64.07, that would trigger off a bearish movement within this complex sideways range in the medium term that is still intact since 16th of April, which the lower limit at 63.65 will also correspond to the rising 50-day moving average as well. Right, so net overall, given its lackluster bullish momentum as we are seeing right now, failure to have a proper breakout above 64.55 on the Aussie dollar, we will still maintain its neutrality stance between 64.55 and a slightly adjusted upward lower limit, which is at 64.07. Lastly will be the dollar yen. So the dollar yen on last Friday, we still maintain our bearish bias, but we do expect a minor push up first before the bearish bias resume. And the minor push up managed to fulfill its objective, hitting our first resistance at 144.25. So still no change, still maintaining our, okay, so what we do intend to do over here. So let me do some slight adjustment to the pivotal resistance towards 1-4. Okay, give me a minute. Seems to be that it's at this level here. Or just now, I don't know why it should be the 20-day moving average, this level. Okay, 144.80. Okay, just now it's just shifted. Okay, so 144.80 short-term pivotal resistance level still remains this almost unchanged from last Friday, which is now the 20-day moving average. All right, over here. So as long as 144.80 short-term pivotal resistance not surpassed the upside, we'll still maintain our intraday trend bearish bias on the dollar yen. Near-term support level to watch will be the minor swing low area of 26th of May and 27th of May at 142.35. A breakdown below 142.35 may expose 141.65 next, which is the minor swing low area of 23rd of April over here. All right. However, if price actions suddenly stage a push up and surpass above 144.80 with hourly close above it, then today's intraday trend bearish bias will be invalidated to see a revisit on last Thursday minor swing high that got rejected at 14610. There also confluence with the minor swing high of 16th of May previously. Right, so that's for the dollar yen. Still maintaining our intraday trend bearish bias using 144.80 as my short-term pivotal resistance level. Next up will be the major stock indices, where we will have almost a change of the directional bias after last Friday and this Monday trade bubs or trade rhetoric between US and China over here. So it seems to us like right now the Hong Kong 33 now is now no longer bullish right now, as price action reintegrate back below the 20-day moving average over here, and right now it's testing the 50-day moving average at 22,680. All right, so given that the hourly RSI is hitting the extreme oversold level, all right, over here, so this extreme oversold level is the lowest so far since the start of April. All right, over here on 7th of April. So it's almost a month lower, hitting a month low on a 2-month low on the hourly RSI at the extreme oversold level. So given this extreme oversold level, and right now it's testing the 50-day moving average at 22,680. So we will flip to a neutrality stance for the Hong Kong 33, neutral between this 22,680 and as well as this level here. I put a Titan one. Okay. Today's Asia session intraday high 23,060. 23,070. Pardon me. Let me do a Titan one. So neutral between 23,070 and 22,680 for now. Only a bullish breakout and the hourly close above 23,070 that would revive the bullish bias on the Hong Kong 33 to expose the next near-term resistance level again at 23,600. Right, so neutral for now between 23,070 and 22,680 on the Hong Kong 33, given that the hourly RSI now is coming close to a extreme 2-month low oversold level. Next up will be the Nikkei 225 or the Japan 225 representing the Nikkei 225. So last Friday we were neutral. It broke below our neutrality limit, and right now it's now trading back below the 20-day moving average. So with that, I'll be using last Friday rejection candle right over here, last Friday rejection candle, and also this bearish pin bar as well at 37,750. So 37,750 will be my short-term pivotal resistance for today on the Japan 225, and we will flip back to a intraday trend bearish bias below 37,270, which is testing almost testing it right now, exposes the next near-term support level at 36,930 next, right? 36,930. Failure to hold above 36,930 may revisit the 23rd of May minor V-shaped swing low at 36,450, which is coming very close to the 50-day moving average as well. However, if there is a sudden bullish reversal and the hourly close above 37,750, then that would invalidate today's intraday trend bearish bias to see a retest at the 37,980. Only a breakout above 37,980, which is the 200-day moving average, that could potentially revive the bullish bias or the bullish tone again to revisit 38,460 in the first step, which is the minor swing high area of 29th of May that confluence with 14th of May that put a stop to the current minor bullish trend previously seen from the low of 23rd of May. So for Japan 225 today, given its bearish price action right now as we are speaking, we'll flip to a intraday trend bearish bias using 37,750 as my short-term pivotal resistance level. Next up will be the Germany 30. So given the lackluster movement that is being seen across the globe right now, in Japan, in Hong Kong 33. So for the Germany 30, there could be a risk that it may retest the 200-day moving average, the 20-day moving average again over here. So with that, we will flip to a neutrality stance for today for the Germany 30. So neutral between last Friday rejection level, all right, that can't break above 24,125. So that was our upside trigger level. It did manage to clear above it before trading down slightly at the start of the US session and throughout the US session. Okay, so this will be my upper neutrality range, and the lower neutrality range will be at this 23,670, which is very close to the 20-day moving average. Okay, so given the lackluster movement that's being seen in other major stock indices, so I'm not so convinced that the Germany 30 is able to stand on its own and continue to shape higher high on the intraday basis. So with that, I will flip to a neutrality stance. Upper limit is last Friday upside trigger level that failed to break out on the upside. So that will be the upper neutrality zone on today's neutrality stance for the Germany 30, 24,125. And I will use last Friday short-term pivotal support level as my lower limit of today's neutrality stance at 23,675, which is slightly below the 20-day moving average. So neutral between 24,125 and 23,675 for the Germany 30 for today. Next up will be the major US Wall Street indices, starting with the US Wall Street 30, representing the Dow Jones Industrial Average. So the Dow Jones Industrial Average managed to survive the 20-day moving average. Here's up, almost hit our upside trigger level at 42,440, which is also correspond to the 200-day moving average, but failed to maintain its bullish momentum and traded lower thereafter in the entire US session on last Friday, and in today's Asia session is down slightly by negative 0.33% after that trade hawkish rhetoric between US and China when I mentioned earlier at the start of today's daily dose. So given that it managed to survive the 20-day moving average on last Friday, but can't break above the 200-day moving average on last Friday again as well, and given the negative news flow pertaining to the uncertainty regarding about US-China trade truce deal that was, but it could potentially be disregarded again, where both parties, US and China, starts to up their rhetoric on tit-for-tat measures. So that could actually negate any bullish tone that potentially that we could have in today's intraday session. So given that they're being sandwiched between the 200 and the 20-day moving average, I will flip to a neutrality stance today. So neutral between 42,440 and the lower limit for the US Wall Street 30 neutrality stance will be at 41,850. Lastly will be the Nasdaq 100. So the Nasdaq 100 on a technical perspective seems to be more bearish than the US Wall Street 30. Why? Because price action on last Friday, it broke down below our Titan short-term pivotal support level at around the 21,200 level, hit the 20-day moving average, push up, but got rejected by a bearish candlestick at the close of the last Friday US session. And in today's Asia session, there is a V-shaped minor bearish inverted V-shaped reversal. This reversal took shape right exactly at the former medium term trend line support level, ascending trend line support level that I drew from the low of 7th of April, now turns into a pullback resistance where it got rejected on last Friday, and it shaped that minor inverted V-shaped bearish reversal as we are speaking right now in the Asia session. So with that, I will flip to a short-term intraday bearish bias first, using 21,500 as my short-term pivotal resistance level on the Nasdaq 100. First support level to watch will be last Friday intraday low at 21,015, which is very close to the 20-day moving average as well. A breakdown below 21,015 may expose the minor swing low area on the previous Friday, which is 23rd of May, converging with the minor swing low of 12th of May at 20,690. Only an hourly close and a bullish reversal with an hourly close above 21,500 will invalidate today's intraday trend bearish bias to see the revival of the bulls, revisiting 21,750 again in the first step. So that's for the Nasdaq 100. Next up will be the commodities asset classes, starting with Gold XAU/USD. So Gold XAU/USD continues to actually hover above the short-term pivotal support level that we have since middle of last week, where we flipped back to a bullish bias stance. But the bullish bias stance, the first resistance that it got to surpass, that we keep on mentioning, is the 3,328 level. All right, so this is something like an upside trigger level as well. So this upside trigger level remains unchanged for now, as price action managed to trade back above the 20-day moving average. All right, there's this gap up here in today's Asia session at the 3,300 level, all right, around the 3,300 psychological level. Okay, to be precise, 3,295. Okay, 3,295, pardon me. So this will be my first support level to watch, 3,295, but pivotal support indeed will be this V-shaped reversal that has taken shape on last Thursday, 32.52. So no change, 32.52, short-term pivotal support level for Gold XAU/USD. Still maintain that potential bullish bias recovery scenario, but in order to kickstart a impulsive up move sequence that it could shape a much more higher chance of a higher high, it got to have a bullish breakout with an hourly close above 32.28. Right, so this will be my first resistance level to watch for today, above 32.28 in first step. Potentially could revisit 33.70 next. Only a push down and a bearish reversal with a hourly close below 32.52 that would invalidate today's intraday bullish bias to kickstart a corrective decline sequence, exposing the next near-term support level at 32.20/32.04, which correspond to the rising 50-day moving average as well. So that's for Gold XAU/USD. Next up will be the West Texas oil. So the West Texas oil faced the news of that so-called sell the rumor, buy the actual news flow, all right, narrative, where this gap up was triggered off by what market is expecting. That means OPEC Plus did indeed increase 411k more barrels per day starting from July, but that is within market expectation. So, but however, this could be a dead cat gap up or dead cat rebound. Why? Because price action continues to remain below the 50-day moving average, and as well as it continues to trade within this symmetrical sideways range configuration depicted by these two converging purple line, lower limit of the symmetrical range, upper limit of the symmetrical range that is in place since the low of 9th of April. So it's almost a month of sideways range configuration as price action continues now to hover back above the upper limit of this sideways range, which is also below our 64.06 short-term pivotal resistance that we have for the entire of last week. So ever since last week, it can't break above 64.06, and it managed to trade down below, hit 60.35 before bouncing back up again. And before the release of the OPEC Plus outcome decision on last Friday. It hit our support level before gapping up in today's Asia session. As we are speaking right now, it coming very close to the 50-day moving average. Price action shaped a bearish reaction, and also we start to see the hourly RSI starts to inch back down after hitting the overbought level. So potentially this could be a dead cat gap up rebound instead over here. So with that, I will be maintaining my intraday bearish bias within this symmetrical triangle range configuration, 6406 short-term pivotal resistance level. First support level to watch will be the gap up support level that we formed in today's opening Asia session at 6135. So 6135 will be my first support level to watch in today's bearish bias. I put it in writing. Okay, give me a minute. Okay, hopefully it turns up. Come on. Okay, good. 6135. Okay, below 6135, we'll revisit last Friday low at swing low at 6035, where price action managed to survive so far since the minor swing low of 9th of May. Right, so this seems to be the May lower, the close to the May low at 6035. Right, only a breakdown below 6035 may trigger off a deeper slide towards 58 near-term support level. So i.e., in a nutshell, still maintaining our intraday trend bearish bias for West Texas Oil using 6406 as my short-term pivotal resistance level. Two near-term support level to watch for today. Firstly, 6135. Can't hold at 6135, may expose 6035 next. So that also sum up the intraday technical outlook on all the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So today will be a rather quiet session during the European session. So key data will come in at the 30 minutes after the start of the US session at 10 p.m. Singapore time, where market participants will focus on the ISM manufacturing PMI data. So market expecting is a slight improvement to 49.5 for 48.7. So within the subcomponent, market participants also be looking at the cost of businesses or the cost of doing business in the manufacturing sector in the US over here. Okay, where is it? Okay, so this week, I don't know why it's flipped back to next week. Okay, so come on. Okay, it's not showing. Yeah, so this is the ISM manufacturing prices. So market is expecting another rise to 70.2 to 69.8. So if this rise continue, it still represent a kind of forward-looking sticky inflationary trend in risk in the US economy. So something to look out for. And at 10:15 p.m. we have a Federal Reserve official speaking, Fed Logan over here. And at 12:30 a.m. Heading into early Tuesday Singapore time, ECB President Lagarde will be speaking, followed by 12:45 a.m. Federal Reserve official Fed Gooseby will be speaking next. All right, so that sum up today's Daily Dose of Market Insights. I'm Kelvin here signing off. I wish you all a great day ahead and we shall speak again tomorrow. Thank you.